Hey, everybody. It's your boy, Chicago Sean McLaughlin. How are you? Happy Easter to those of you who celebrate. Today is Sunday, April 4th, 2021. It's a beautiful spring day here in Colorado, 75 degrees. I spent the whole day outside with friends and family, having a nice meal, walking outside by the river, playing with the dogs outside. It was just great. I hope you've had a great long weekend. And man, I don't know about you guys. I wrote about it this week, but I'm always the last person to know when we have a day off. I had no idea we had Friday off this week. It wasn't until Tuesday or Wednesday that I learned that we had a Friday off, and it was like, whoa! It was like found money. It was just it was great, and I made the most of it. I went on a big hike on Friday up in Rocky Mountain National Park. 6 hours of solitude in the woods. Lots of snow up there still. It was great. It was so great. Anyway, quick topic here we're going to talk about today. But before we get into that, let's just bring up the charts here real quick. Here we go. I just wanted to talk a little bit about what we saw last week in the markets. This is the S&P 500 chart, the SPY. We had a major breakout to new all-time highs on Friday. This is not something to ignore. This signals to me that the markets have a lot higher to go still. I don't care who you are or what you think and what you're observing in a lot of individual names. The broader markets are still chugging higher. The top could happen at any time, but right now the odds are in favor of the bulls. So that's the way I continue to lean, and that's the way I'm going to. Those are the types of trades I'm looking for right now. I'm looking for bullish setups, maybe a couple neutral setups, but certainly nothing bearish is popping up on my screens right now. But I wanted to go back to the full screen. I'm not really going to talk about much on my trading screen today. I really just want to have a one-on-one with you in the camera and address a question that came into me this week. One of my customers was asking. He's a big believer in the 80-20 rule. Hopefully you're familiar with the 80-20 rule that talks about 80% of your results often come from 20% of your efforts, right? And there's lots of different ways to spin the 80-20 rule, and I think of it in a lot of different ways. But certainly as somebody who likes to use options to put on directional bets, I like to put on a lot of directional trades using options. I could certainly say that 80% of my profits come from 20% of my trades, right? That is absolutely certain, because 80% of my trades oftentimes will end up being a net wash, right? I'll have a bunch of small winners, a bunch of small losers. They'll end up washing each other out. And the other 20% of the trades are the ones that really account for all of my profits at the end of a month or end of a quarter, certainly by the end of the year. So the 80-20 rule certainly plays out in my trades. I can also say that 80% of my effort when I'm selecting trades, if it's a bullish trade, I'm looking at stocks that are at or near or threatening to make all-time highs. And on the flip side, if I'm looking for bearish directional trades, I'm looking for stocks that are making 52-week lows or major long-term, medium-term lows. I'm looking to ride trends. 80% of my trades absolutely fall into that bucket. I'm rarely doing counter trend trades. The most counter trend I'll typically do is maybe a delta neutral trade where I'm selling premium, maybe an iron condor or a butterfly or an out of the money strangle. But definitely 80% of the options trades that I put on, at least in the directional realm, are either, if they're bullish, they're stocks up there threatening new all-time highs. Those are my bread and butter. Those are the trades I like to make. Those are the bullish trades I like to make. On the flip side, bearish trades, I'm looking for stocks making 52-week lows. Now, look, we've been in a market environment for seemingly forever, certainly for a couple of years now, where there haven't been too many bearish setups, at least the bearish setups that I like to make. So for the last 2, 3, 4 years, most of the swing trades I've put on, 90% of the swing trades I've put on have been bullish. And then what kind of trades am I putting on? Given the environment that we're in the bullish environment that we're in, easily 80% of the trades that I'm putting on these days are either bull call spreads or straight long calls. Volatility in a lot of names is pretty cheap, so I've been doing a lot of long calls, just keeping it simple. Just because I'm an options trader doesn't mean I need to make things complicated. In fact, those of you who know me know that I love to keep things simple. I don't want a whole lot of moving parts if I can avoid it. I want to keep it simple. I want to express my directional bent as easily as I can. So long calls are the way to go for me oftentimes. That's always my preference. I have been using a lot of bull call spreads lately because we have seen in a lot of momentum names, we have seen out of the money skew in the out of the money options. We're seeing volatility actually priced higher in the out of the money calls than we have in the out of the money puts, which is unusual. That is not normal. But in the environment we've been in lately, with a lot of retail traders coming into options, a lot of momentum names and a lot of short squeezes, a lot of memes going on, the whole Reddit business with GameStop and all that. Because of all that, we're seeing a lot of premium and out of the money calls. So because of that, I've been employing a lot of bull call spreads where I can put on a bullish trade where I'm buying a at the money or just slightly out of the money call, but selling a further out of the money call where there's juicy premium, selling that call to lower my cost basis and stack some edges in my favor. So certainly right now in this environment, 80% of my trades have been bull call spreads, straight long calls. But I'm definitely a believer in the 80-20 rule. I definitely believe that 80% of our results are achieved through 20% of our effort. Not that the other effort isn't important. You have to do the other effort. But at the end of the day, a lot of effort just is spinning your wheels. And in trading, that's certainly true. And we can't really avoid that. That's why risk management comes into play. That's why we size positions small. That's why we take losses small. That's why we define our risks. Because look, 80% of our trades are just not going to be big winners or big losers. They're just going to not do a whole lot. But we have to have that process in place so that we can put ourselves in the position to catch those big winners that make all the difference. And that's where the 80% of results will come out of the 20% of our trades. So, hey, that's a little philosophy for me about the 80-20 rule. I'd love to hear how the 80-20 rule applies to you in your trading or anywhere in your life, in your hobbies, in your side businesses, in your relationships. If you want to engage with me, please do. I'd love to hear it. You could put the comments in the YouTube channel, or you could hit me on Twitter. I'm at Chicago Sean. Would love to hear it. Anyway, it's a new month. April, spring is here. I'm excited for trading this month. I'm really excited. I got a lot of things on my mind. I got a lot of trade strategies I'm kicking around. I'm excited to really get going this week. I hope you are too. Trade them well. Take care. I'm Chicago Sean. I'll see you soon. Bye-bye.